Welcome in, guys. Welcome in, VC Crypto Nation. We're gonna chop up a daily here. Something that is easy to understand, right? Systems and patterns. Well, no, not really patterns, but systems are patterns, and it's all it comes down to how you see it. But once you have a system, then we can turn around and we can work on what's called basically um, strategies to clean up. So the one thing we want to start off here is we always talk about the making trading easy and the 1 2 3, right? 1 2 3. There's 1 2 3 steps to everything you do, right? You should always have a 1 2 3, whether it's entering a trade, the reason for a trade, and the fundamental beginning of what we call Elliott waves, right? So you can see here in Elliott waves, there's always fundamental patterns, right? So we have a move to the upside, right? As you can see here, let me clone this wave real quick. You always have a wave one, right? Which is starts off here. You always have a wave two. I'm gonna clone wave two real quick. And then there's always the next big move up, which is simply normally what they call a wave three, right? And these are the fundamentals of a lot of trading systems. And the other thing this covers is something where most traders do this, that they look for what's called a breakout, then they look for what's called a retest, and then they enter on the retest, and they look to hold that for their longer moves. Okay, so when you 1 2 3, right? Don't forget to share this live, guys. Share this live. We're about to get into a simple system of trading so that you can at least understand. If you guys understand what everyone else is doing, right? And there's the hardest part here is going to be breaking down the strategies, right? It's and strategies come on the second step. The first step is a system, right? Something that you can understand and really can help you see the market or what's supposed to happen. So we have a saying, if we know what's going to happen, when it doesn't happen, then we know what will happen, right? So if we know that everyone's trading the simple breakout, pullback, retest entry, and then the long, right? And then right here is where FOMO kicks in. You can see this is normally where people sell that second wave, and then as it pulls back down, the people that were late to the trade get in on the next trade, and that brings that next push up to the upside there, right? And that's this kind of like a three wave, right? Doesn't happen all the time, but all depends on how much money is in the market, right? But these three waves are basically how you can, understand, especially on a time frame. The most important thing is understanding, patterns, systems, but time frames, right? The bigger the time frame, the bigger the movement. We need to know where the money is, right? So when we look at a daily, we can see where the money is. That's why we look at the daily. The daily lets us know, are we in a long trading session or a downward trading session? You can make the thing about it is you can make longs even if you're headed down. There's longs here depending on your strategy. This is why tools we have for leverage, the higher the leverage, can always make a long even in a downward pattern, right? The lower the leverage, you have to trade with the daily pattern, right? It's a lot harder to make money going up with a lower leverage, especially if you're trying to go against the grain. So strategies are going to basically help you make decisions on what trades you should be doing and where you are. But until you understand the direction of the market, you cannot make a decision on what trades you want to make. So if that makes sense, hit ones in the chat, guys. Share the live, guys. Don't forget to share the live. got to get the algorithm moving to where you want the algorithm moving so that way it basically keeps us up to date with everything. So here's how it goes, right? So 1, 2, 3, right? There's always a first move. Okay, that's wave one. There's always a first move up. After that first move, there's always a retest, even if you go down to these lower levels. See, no matter what happens, the 1, 2 always has a 1, 2, 3. So it all depends on where you're looking totally to find your basics, right? And just understand when it moves up, it has to retest, and when it retests, that's the bigger move. That's the 1, 2, 3, right? Push up, pull back, retest, and then move to the next side. Once you understand that everything is 1, 2, 3, that allows you to start looking at the market a little bit different because the 1, 2, 3 simply follows the same movement over and over. It's just on different time frames it adjusts to different moves, right? So in this particular moment, the big move to the top is here. They're always going to be a pullback for profits no matter what. So if this guy here is a, let's say, a position trader, which is a, $50,000, $100,000 trader, right? What we would do here is we would enter this position here, use a lower leverage, run this up, and then once it pulled back, we'd look for the pullback section, and then once it pulled back, we'd run it again, and this time we'd use a slightly higher leverage because it's the second move, which means we expect it to at least reach its original form, which was the original tip over here, and then we expect that is our new target zone to hit, as you can see right here, and then from there, um, that's the move. So if we use, let's say, in this particular wave one, we used a 5x or 10x leverage. Let's just say 5x leverage, and we moved up on the pullback. The next time we go up on this next move, we would use a 10x leverage, and then we would have that next move at a 10x, right? And just to kind of understand what we're saying is that when we make a decision to go long here, let's say that we closed off at um, 200%, right? Because these are the basics here, right? So this entry point here would have gave us something like 243%, right? Now, when it pulls back down, the second time it comes down, we would be looking to go to that same point, right? Which would be in this section here. On that pullback. I don't know why that seems a little crazy for me, but let me see what this is adjusting here. I'm just checking this indicator real quick. Okay, so this is where we're really looking at here. From this move here, an entry point of 200%. Then on the pullback, the next move is a yeah, something's off on this indicator right here. I'm gonna have to check this out real quick because this is why is it adding? Okay, okay. Let me figure this out real quick. See how it's like going through, it's dropping, it's, what is it dropping that for? So weird that it's counting down. All right, let me get rid of that, and I'll come back to that. I don't know what that's doing. I'm going to jump into a short position, right? And short positions is just, you go the opposite direction. There we go. I have to figure that out. Let me look at these settings real quick, just to kind of like understand. Okay, 1,000, lot size 125. Okay, so 1,000, 125. Okay, let's go over here, look at the long position. We look at this indicator. Okay, this should be 1,000, 125. Okay, ticks 106, 401. Ticks 106, 401. Okay, so I mean, this looks. We'll have to go check this out because this indicator is acting a little strange here. I don't know why it's doing that, but we'll use the opposite one. Doesn't really matter. Okay, let's measure this out. So from the area that we would get into, which would be right here, to the area that we enter would be right about here. So this is a 144% move, right? Now the second move, it comes down and bounces. It's a 100% move, right? So this is just kind of like, so you can understand, when we get into this lower section here for the 150, we're using a 5x. When it bounces, we're using a 100. Now we're using a 10x, right? So what that does for us is that it's the same 100% move, except the second time on the bounce, we double the ability right there. We double the ability to bounce there. So now, since we know that there's a 1-2 pullback and then a move, we increase our leverage because we know we're going to get a higher percent move, and we have target areas now that we know that it's looking to reach its previous all-time high right there on that candle. That is a strategy. So what we're doing here is, once we know a pattern or a system, right? The system is a move up, right? And you could have caught this move two different ways. You could have caught here, pull back, caught it here and up, or if you were paying attention, or depending on how you're trading, that's what I'm saying, or you could have caught this, saw the pullback, which was the smaller wave two, and then went from a 5x to a 10x on this big move here. So 5 up here, sold, pullback, 10x here, because that's the bigger move. Now, these are strategies, guys, right? So you have Nikki. What's up, Nikki? So these are strategies. So that's what it's saying is, like, once you have a system, then you implement your strategy. Strategies are different for every trader because they come in where you're going to have different leverages, different sizes. Don't forget to share the live, guys. Share the live. So this is Solana that we're looking at right now. So that's the basics of what we're dealing with here, right? Wave one, wave two, wave one, wave two, right? So these are the basics here, right? So now we're going to come over here and we're going to like slide this into where we can dig into the current times, right? And you can see here wave one, wave two, right? Now this is what we talk about when you expect something. So if we have a wave, right? For instance, this is a wave one here. Now when we get wave one, we expect a wave two pullback, and then eventually, you know, the rules of, let's say, Elliott waves, right? And these rules and kind of things that you have, they're to save you from making impulsive decisions and also understand where you're currently at in the current decision, right? So, for instance, we know that when we have a wave one, everyone knows that if they're tracking Elliott waves, that wave two will pull back 50 to 80%, right? So we would expect a pullback somewhere off of this line here, and then we would expect it to bounce, right? Now, the thing about this is, like we say, when you know what's going to happen, when it doesn't happen, then you know what will happen, right? So when we have this push here and the pullback to two, and we end up getting a blue moon, and it keeps coming down, right? Keeps coming down, and it doesn't bounce, then we know that wave three is not going to happen because this has blew past wave three's opportunity, which means that now we are in a wave one downside, right? And the most important trade that we want to get into is always the wave one downside and then a wave two bounce, right? And let me get this clone over here. We'll have these over here so we can clone these, right? So clone, all right. So we're waiting for some type of bounce, and then what we would be waiting for is the next down move, right? So it's the same 1, 2, 3, 1, 2, 3, and then once we have those, like I said, once it does what it's supposed to do, then we know. Now the same thing here, just on the downward side. Wave twos on the reversal of the Elliott waves is not going to be as strong as a Elliott wave on a pullback after a push, because the push normally is people taking profits. On the way down, it's not. It's based on limit orders, people buying limit orders. So a lot of times you're not going to get a 50% bounce or 80% bounce. Sometimes you're going to get a medium bounce, and you can see that this goes into a cluster, which is where it goes sideways, and that lets us know if it's going sideways and there's no chance here for our indicator to actually hit a green moon. See how far apart this is, right? See these two lines here. So these are the indicator we use, the making trading easy moon. There's no chance of a green moon here. You see that? So since there's no chance of a green moon and it starts to come down here, then we know that we're definitely going to go into another short here, right? So that's how you understand what's happening, right? There's no chance of a moon. When you're trading long, right, when you're going up, you want these green moons because the green moons are indications of where there's going to be strong bounces, right? Anytime there's a green moon, there's a spike, right? See these moons? Wherever there's a moon, there's a spike. There's a spike. There's a spike, right? So if there's no chance of a green moon, then we're not getting a spike. Now notice here we get our green moon. Here's a spike up, right? And let's go over the same scenario again that we just kind of like covered. All right, so we're going to clone this up. You get your moon, right? Here's your move up. Your moon spike comes. Not the greatest moon spike in the world. Little bit weak, but that just lets you know that there's no money right there, right? Then it has its pullback, right? Wave number two. And notice how it stays within the parameters of what we need, which is 50 to 70% pullback. If it stays in that zone, then wave three is considered an option for a long. So you see this push here, slight pullback, and then it starts to move up. Now let's take a look at this particular move on a regular chart, right? So this particular move is right here. So wave one is this bounce right here, right? See the wave bounce. Wave two, it pulls back to here, right? You can see here's your wave one, here's your wave two. Now it looks different, and this is where understanding, what you're looking at. The reason why we use the money chart, right? This is a very clear example. The money chart is going to show things that are a little bit different than what the candles are, right? So you see how on wave two here, we have a push up from the bottom here, and this is a push up from here to here, right? Now, down here, you see the pullback as wave two pulls back, right? It pulls back half of wave one, right? On the regular chart, it pulls back further than the original entry right there, right? Now, most of the time when you see that happen, right, that would eliminate it being a wave two because it pulled back further than the 70% that would make it a wave two, right? So you see, it pulls back further than it needs to be, and that eliminates the fact that it would be an upward movement of a wave two, right? Now, on the other side, if we go up here and we're looking at this particular section, and I'm going to pull this down here, we have a section here where we have wave one coming down, right? We see wave one, and then there's no bounce here, right? So you see how this See this little section here? There's no bounce here. It comes down, and it finishes wave 1. And then wave 2 is this bounce right here, right? This little pop right there. And then after that pop, that's when we go into a third move, right? A wave 3 move, which is where it finishes its downward move here, right? Into this zone here. Now, if we look here, right? This is a bounce move here, right? So there's all types of ways to see this pattern, right? Ones, twos up, 1, 2, 3 down. And this is where strategies come into play. Yo, Last Emperor, what up, baby? XRP to $4, Emperor. Can I get that $4 XRP? Right? So this is why, a lot of times, we're covering this basic here on the daily because we have to get to the point where we are coming across. Don't forget to share the live, guys. Share the live, share the live. Let's get some people in here. So this right here is a very simple concept, okay? Can't really mess this up. It's a 1, 2, 3, right? Making trading easy. Making MTE, 1, 2, 3. Making trading easy. Patterns, pull down, bounce, finish the pull down. Pull down, bounce, finish the pull down, right? Then it starts to move itself into an upward direction, pushes up, pull back, right? And you can see here on the bounces and the pullbacks, there's not a lot of volume because look where we're at in our volume indicator, right? This lets us know there's not a lot of money down in this section. This is why we don't trade in these lower sections here because there's not enough money down here, right? There's not enough money down here to make a coin actually move in a direction that is where as much as we need. But because this is the daily, right? This is the daily, bigger time frames create little bitty bounces that, even if you're looking for a short or a pullback, right? And you're trading against the grain, depending on your leverage, you can make something happen here. So for instance, you see how we have this section here where once we see this bottom out and we see this first move here, we get this green moon, right? You see this green moon here. Why am I infatuated? Okay. See that green moon right there? So as these start to cross over, right, we come across a green moon, right? See that spike there in that green moon? Which means you would be trading on this big green candle here, right? This is the candle that you would be trading in on, right? And we can see here that we have a pullback, a daily green candle, right? Now, if you were watching this trade, and this is a strategy part, right, guys? Don't mix up systems and strategy, okay? This is basically this. We know that after this pullback, right? Because there was a big 3-wave pullback, we know there has to be a 1, 2, 3 bounce, right? Now, because the money is so low, that's why we use a money indicator, right? This is a money indicator. See, it's when it's below this middle line here, when it's below this line and the candles are coming down in the downward direction, right? You see how these candles they're in the downward direction, you see? These candles are in the downward direction, right? They're not in the upward direction up here, okay? See, that's the difference. This is money. This is no money. When there's no money, right? If there's no money, then what happens? There can't be a lot of movement, right? But there are bounces. Okay, there can't be a lot of movement, but there are bounces. Okay. Now, during this moment here, when you see this green moon right here, you don't have the candles where you want them, right? You don't have the candles above the positive zone. You have a green moon, which creates this candle here, right? So if we looked at this particular candle here, and what I'm going to do is I'm simply going to put this green moon through this candle like this, right? And I'm going to slide over to the 15-minute, right? And on the 15-minute, let me see where this is at. This is on March 1st, 2025. That might be a little bit too far back. But you see that there's a push through here, and there's an opportunity here on this next candle, right? Which is normally going to give you this opportunity of 24%. So there's an opportunity here to make 24% on the bounce, right? On the wave one bounce, right? This little bounce that comes up. And then as it pulls back, you're expecting the pullback to do something like 50%. When it doesn't, right? You see this big pullback. When it doesn't, you know it's going to go a little bit further, right? And then we have wave three. Now, here's another wave three. See how it goes flat here and starts to move up here, right? You see that bounce. And you realize here you have another opportunity for a trade. This trade here to the top over here, you know, that's 16%. See that? See that green up there? 16%. See? 16%. So this bounce here, which is the wave right here, you have another 16%. So there's trades in here that are happening all the time. You just have to start understanding what trade you're in, right? What system are you in, right? Where are you at currently? Is there enough money to make this go all the way up? No, there's not enough money to make this go up, right? Now, once it builds momentum, right? You see the money starting to come in here. Once it builds momentum, then you start to see where money starts to come in. The next time it pulls down, right? It should have a bigger move up, right? Meaning that it should break this current top here, right? So these are systems, right? We know that once we get through this wave two, wave three pullback, right? So depending on how you chop it up or where you're looking, you can see here, we know on our pullback, there's a wave one pullback, a bounce, right? And then there's a wave, let me get rid of this green here. We don't need it anymore. Then there's a pullback on wave three, which kind of works its way down. Now, what it's doing here is we're waiting for, as it's starting to work its way down, is we're waiting for the movement to go the right direction. Now, we expect wave three here to be a bigger move than that current move here. But we're in the lower side of money. So we know that by being on the lower side of money, we can't get the big move we need. Okay? And that's just the way it is. Now, once this move fails out and we start to move again in the other direction, then we start to build again. So now, once this move comes down, what do we have? Right? Now we're moving again in the wave one directions again. We're moving again and setting up the system so we know where we're at. So here's a wave one down, wave two, wave three down. And now this becomes a positive trading area, right? Why does it become a positive trading area? So if you want to trade successful, right? If you, what's up, man? So it really comes down to like growing into like the section where you have the money, right? When you have the money in this section, then that's where the wave one, twos, and threes matter because that's where the money actually is, right? So here you guys can see that once the indicator has a section where the money has climbed above, right? It's climbed above this middle line, right? And basically what happens is the candles are now in the upward position, right? You see how the candles are now in the upward position up here, right? Once the candles get to these upward above this line here and they start going to the positive side, this creates what we call a positive trading zone, a long zone, right? So this is where that we can dominate and we can make sure that the trades that we're making are positive, right? So once we have that daily in the positive volume, the odds of us being successful are a lot higher. So now that we get to this section, you can see that we have a break here where we have a wave one, right? Right here, wave one, right? Coming down from that green moon. We have a wave one that goes positive. once it goes positive, what has to happen? Right? It has to have a pullback, right? So here's the pullback. Now the pullback could go back 50% to 70. So somewhere in this zone here, it can pull back. We know that. And then once that happens, wherever that is, we're going to get a wave 3, right? And that's really what we're looking for here is the wave 3, because wave 3 we already know it has a couple different options, right? The first option on wave 3 is that it's going to go back to its first move. So no matter what, you see the top of whatever this wave was, we can see that it's going to at least top that play, right? So once you have that pullback, you know you're going to get that momentum. So here we go again, where once we have this pullback, right, we go into the waves again, right? The indicators, guys, go check out. There's a full welcome video if you go to the TikTok side, and that'll get you all set up. And everything is VC Crypto Nation. All right, you'll see this on the TikTok page. All right, remember this is all pure education. There's no financial advice. This is all pure education. And but that'll help you out right there. There's a welcome video, guys, you can watch. Keeps it simple. All right, so now let's go push this in here where having the system, we know that once we're in this positive zone, all right, once we're in this positive zone, we know that we're going to have we're looking for a 3 move, right? What are we always looking for? We're looking for the 3 move. So let me slide over here, and we're going to pull our waves together. So where's our waves? So once we get into the positive zone, right, we're going to have that move to the upside, right? This is normally going to be your wave 1, right? We always know there's going to be a wave 1. All right, throw my caps on here. And this is by understanding what you're doing here, you can have an idea of what's supposed to happen, right? Then there's going to be a wave 2, right? Wave 2 comes in. And then wave 3 is the one that we're looking for to climax this out and give us the best, opportunity for FOMO or longer pushes, right? But wave 1 is the one that gives you the opportunity for that original push in there, pull back and run. Now you can see that this is happening inside of where we want to trade. You see how this is in the daily? So this is called the daily system, right? The daily system is where we wait for volume to get above the daily 0 line so that we know we have a long position here, right? So we know that inside this area, and I'm going to draw another box in here. This is going to be the pullback area. This is where wave 1 came through. This is the area where wave 2, and I'm going to make this the inside box. This is the pullback area. And then when this pullback area, you see down here, when this pullback area stops, then that creates the next opportunity, right? So we know that there's 2 waves here. There's a long opportunity, a pullback opportunity, and then the next long opportunity. Inside of this long daily opportunity, because the volume is above the 0 line, this means we're in a long zone, right? You see this? One move, bounce, pull back. And then once we finish that long zone, once we get to the 3rd wave, which is right in this area here, you can see that we start to switch over to a section where now we understand that the volume has been exhausted, the money's exhausted, and what has to happen is there has to be a pullback, there has to be a bounce, and then there's got to be a wave 3. Now, it doesn't mean it's always going to pull back very far, but it does mean that, in these sections here, there has to be some type of relief or profit taking in these sections, right? So a lot of times you can see here, here's another, strategy is that when you see a double top, right? You see these two double tops? When you see the double tops, then you know that you should be shorting from that double top down, right? That's a strategy, okay? That's a strategy right there, right? That's why you hear people looking for double tops. And it's important to know what strategy is out there, because you have to understand what the market is doing, right? You have to understand that what the normal people are doing, right? What is retail investors going to do? Yo, Dr. B, what up, baby? Right? Yo, Dr. B. So this is where you have to understand what's possible, what's going to happen, right? And then we're back in the same situation where um we're looking for, what's coming. So once you have these basics down, right? What are the basics? We're always looking for a breakout, a retest, and a push. Um, a double top short, right? These are really common strategies that everybody uses. So when you understand that, you can then put it in perspective and say, okay, this is where, these things are going to, trigger. The other thing is if you're using the 1, 2, 3 move, we know that basically then the one, the pullback, and the long, that once we hit that 3 move, we know that we should be looking for a double top for a short, or a higher push on the number 5 wave, which is normally after a 3, there's a slight pullback, then a push, which is ending all the FOMO orders. So the pullback is the first sign of taking profits. The next bounce that comes after the third wave, right? So third wave takes profits, bounces for the last FOMO, and when the FOMO is done, then you end up in that next move down. The FOMO creates the double top, and that is where you can find yourself a short position on the way down to reset, where they need to look for the original areas um, of setup. And normally that's going to pull back. If you kind of look across here, normally that'll pull back to an area where the original breakout happened, and it's normally where the resistance became support. So when it broke out from that area, that becomes the new area that you would be looking at. So you can see here, just to kind of give you an ideal of what people are doing, you see that if you have a channel here, right, normally you'll have an area. So you see this support here, right? So you have an area that was support, then it broke through the support, and then it kind of sat on the support. Here it breaks up the support, breaks through the support, right? And then now this line here that it's been sitting on, that becomes the what they call the resistance, right? So through the resistance, right, or through the support. So support, right? So you can see all these candles. So you can kind of understand what people are looking at. And they're guessing just like you. This is why we developed our indicator, because you don't need to guess at all these things that are happening, right? Bull flags, bear flags, all that other stuff. None of that actually kind of like it's all guesswork, right? What are people going to do? That's why we have the money, right? So in this particular moment here, you see how there's no money? You see how my indicator down here says no money, right? So I'm not too worried about this breaking out right here, because there's no money, right? So there's no money, so it's not going to break out. So here, as it starts to make its way down, it says, okay, it hits support, right? And the reason, what are support, right? Support is just an area where a bunch of retail investors thought that that would be a good place to buy, and they put their limit orders, and then it bounces, and then the people say, oh, thanks for that extra money, and then they sell on them, and then it comes down and there's more limit orders, because when this limit order happened, what happens? So people see that this limit order happens here, right? So people are watching the chart, and this is probably you, this is what you do, you watch the chart and you see that at $130 Solana bounced. So what do? You say, oh, it bounced at 130, right? So then you put your limit order at what? 130. And then as it starts to go up, it pulls back and it hits it. And you're like, yeah, I made a great trade. And then it bounces again. And then they sell on you and they basically make you liquidity. Why did they make you liquidity? Do you guys know why? TikTok, hit the ones in the chat if you know why. Tell me why this makes you liquidity. And guys, if you want to talk about trades, hit the invite button. Come up, man. Come up and join me. And let's talk about like what we're doing. Hey, Dr. B, if you want to come up, let me know. The request to be a guest, guys, you can come up here. You can request to come up and talk, and we can go through this, man. Doris, J Studios. Now, guys, if you're a serious investor and you got over $10,000 invested in crypto, we have a very simple trading system for you and a strategy that will help you basically 12x your normal returns, right? Whatever you're doing, it'll 12x it, right? This isn't hard. It's easy to follow. We're actually going over the system right here, so you understand, right? So this is how to understand where you become liquidity. How did you become liquidity here? Because you thought you saw support, right? You can see here, right? You see support, right? There's support. There's support. They say, oh, double support, we're buying here. And then what they do is they put their buy. That created this bounce. Then you see that bounce and you say, oh, I'm going to wait for the pullback to 130. And then you get in at 130. And guess what? You became liquidity. Why did you become liquidity? Well, you become liquidity because you don't understand the fundamentals of why something goes up, right? Money, right here. See this? This is the money. If there is no money, right? If there is no money, there is no long, right? You can't go long when there's no money, okay? It's just fundamental. You can't go long when there's no money, okay? When is there money, right? Scroll down here. You can see here the money starts to build up, right? We see these little pocket pushes. There's a push. There's a push. And then other people, this is a very simple strategy, right? This is called the high, the higher high, right? And then that's where they would start looking. So here's a high. Then you get a higher high, right? And then what happens is people say, okay, I got a high and a higher high. I'm looking for that third high, and it doesn't happen. And everyone see this? This is just another example of a sell off top, right? It pushes, it pulls back, right? These are retail investors, right? This is so you guys can understand what's happening in these charts, right? So here you go. You have this big dip that comes down. Now I'm a big fan of buying the big dip after like these support moves, support, and then there's a big dip. I like to buy this candle here, right? I like to buy this here because a lot of times there's going to be a surge in this movement simply because a lot of investors, when they see this really big dip happen, a lot of people are buying that big dip because there's all types of limit orders and buys down here. So when you see this dip happen, then there's always a move to that first bounce, right? And it's kind of like a relief bounce, right? I love buying this super dip, especially when it kind of like, you see how this candle goes up, comes down. So I would be setting on this level here, 121. And then it hits, and then you can see that move that it makes from that position. And I normally have a pretty good leverage on that. So I'm normally doing like a 50x. So on this particular move, and this craziness, I'm looking for a 10% move, right? Which is basically 50 times 10, which is 500%. This is a 500% gain. This ends up being a 1,000% gain, right? Because a lot of times there's always a relief bounce that happens in there. Now, if you don't, that's a strategy, right? Let's make sure we understand. Systems and strategies are different, okay? Systems are something you can depend on. Strategies you develop into the system you depend on, okay? A lot of you guys, you confuse the system with strategy. Okay? You have to have a strategy that goes with the system. Okay? The system is right here. You see the system? This indicator right here. If you want this indicator, it's free. It's on TradingView. Just go to the TikTok. Go to my TikTok page. You'll see. Look in my bio. Go to that little section there. When you click on there, it's going to be a welcome video. Watch the welcome video, and then you get the indicator for free, guys. The indicator's free. And all you have to do is basically let me know what your TradingView user ID number, user name is, because it's invite only. And we send you an invite so that you can use the indicator. So if you want the indicator, maybe I'll just make a video saying, hey, if you want the indicator, it's free on TradingView. Put your TradingView username. But there's a welcome video that explains all this to you that you can take advantage of, guys. All right, so now, once we're covering the basics here, right, so you guys can see, these are normally relief waves, and then people make the mistake of holding this position here, this long position, because for some reason they think that this is the bottom, right? Well, we know it's not the bottom. I can look at my indicator here, and I can see as it starts to move up. You see right here, as it starts to move up here, I know this is wave one, pullback, this is wave three. This is wave three on the value, wave three on the money. Okay, it doesn't mean it's going to affect the candles or the price as much as it should, because it's in the lower section of money. There's no money down here. So I don't expect the coin or the stock or whatever you're trading. These work on who trades stock here, man. Hit ones if you trade stock. Hit twos if you trade crypto. Trade three if you do forex. One are stocks, two is crypto, three is forex. Anybody do stocks? Hit ones in the chat. Anybody do stocks? Hit ones in the chat. Anybody trade stocks? Hit ones. Hit ones. Okay. Crypto people. How many people trade crypto? Hit twos. Hit twos if you do crypto. That's what I do. I only do futures. I only do futures. This is futures right here. So you can do this on futures too. But you can understand that this indicator here, right? The lower the level, like this, there's no money here. So when there's no money, the smaller the moves. Right? Crypto, what up, baby? Matt's like, I love crypto. Matt's learning patience, bro. Matt's a trader that came in, traded a little bit crazy, and now he's learning patience. Um, uh, and that's the number one thing. So you have to realize that Benny's getting better. Benny's getting better. And then you guys got to realize that this lower section here means there's no money. So even though we're getting 1, 2, and 3 waves on the money, it doesn't mean it's going to show big moves on the actual coin, even though you're going to see moves, right? You'll see ticks, and it doesn't look like it's moving a lot, but these moves are 20%. This move right here on this third wave, that's a 20% move. That's 20%. That's a big percentage right there. That's 20% on that move, right? So it's not the move that we're looking for, because it's not in the long zone, which means the money has to be positive up here. But it creates an area where we can see a 20% move. So even if you bought at the lower level here, let's say like you bought here, right, and you got in there, this is still a 20% move. Okay, you see that 20%? So even though there's not a lot of money here in the daily, it's still producing 20% moves, right? So when you have 20% moves, you have to have a strategy to make money on 5, 10, and 20% moves, okay? 5% moves needs a different strategy than a 10% move, and a 20% move needs a different strategy. So here, on wave 1, which was this bounce here, right? This wave 1 bounce here, we know that we're not going to get a lot of movement in this wave 1 section here. So we would have a high leverage here, and then a lot of times we don't even play the original bounce. What we do is we see the wave one, we play the pullback, which is the second short here. So we would actually short wave two here, right? So on this bounce, we wouldn't, and this is what I'm talking about right here. So this is a wave one. See that wave one right there? See that wave one right there? So we wouldn't actually, when we see this wave one happen, we would use high leverage because we don't expect it to do too much. We'd be looking for something simple like 5 or 10%. And once that's over, we would definitely short wave two because we know that coming off of this short position up here, we're currently in a wave one down, a bounce, and then a bigger pullback. So we would use, on that pullback, we would use higher leverage to get that pullback. On wave three, which is normally that last little bounce where it kind of like finds its level, right? This is the wave that, the leverages, depending on what you would run, you'd be looking for high leverages in this area because there's no money here. So if you're doing longs in this area, you'd be doing high leverage longs here, right? And depending on the coin, right? I mean, we're getting 20% moves here. So you can, let's say, a 20% move with a 20x, right? If it only moves 10%, that's 200%. So you can do you could be setting yourself up with a 20x or yeah, like a 20x leverage here, or a 10x leverage, right? And when you're working on the daily and strategies, we'll get into a little bit different because I don't want to get off into strategies. But I just want to show you, this is a system that you're using, and then you have to create a strategy that makes you money inside of this system. Okay. So now that we see that this starts to move up, right, and there's a big push, and we get this next big move here, and then we see the pullback coming, right? That's normally at that point we know that we're going to get um, a bigger pullback simply because the volume is now coming down and we got a blue moon, right? So now after this big pullback, right? Because this is the real big pullback. This is where strategy-wise we would get more excited because you can see that there's no money here, a little bit of a bounce, then a push, right? You see this push, then on this pullback, right? So what are we working for here? All right, what's the original technique? 1, 2, 3, right? So in this scenario, right, this push here gives us a nice final move, right? Meaning that after this wave 3 happens and we don't get a lot of movement, see this movement? We know that normally as it pulls back, there'll be a double top, right? So normally on a wave 3 type move, there's a double top. And then here, we can tell that we're moving into a wave 3, which is a bigger move down. So we don't get a bounce here after wave 3. We don't get a pullback and a final little push here to kind of level out. We go sideways, and then we see this little bitty blip. You see this little blip here? See that little arrow right there? You see how that little, the wick kind of like had a moment? See that? So here's your push. This wick tries to show you. And normally what that means is that in this area, the limit orders that were put across here, remember the 127, right? These people saw this move, and this is how you guys become liquidity, right? That becomes, I'm going to turn this orange. That's the support line. You see that support line right there? Let's make it yellow so you guys can see where you lose your money, right? You guys think that across this zone here, there's a support line, you see? Because you had this come down. See that big pull down, right? See that big pull down? You would say, oh, okay, we are going to buy this support. Here's support, right? Here's support, right? And then you say, oh, that's where I'm putting my buy. I'm putting my buy on this support line right here. That's my support line. You guys see that? See how that happens? That's your support line. This is where you become liquidity. All right? Spooky Man. Yeah, Spooky Man. We do have a premium. So premium is really for people that are serious. So you got to be trading, a minimum of 5,000. Um, and because we're going to work with you and give you a full breakdown of strategies and everything, but it has to be something that's worth it. Um, but see, this is where you guys become liquidity, right? You guys find these little areas, you find these little supports that you think are going to now be the support, right? And this is just a guess, right? This entire support system that you just came up with in your mind is just a guess, right? What's up, oh hey? What's up, oh hey? And so now you have the support line here that is a guess system, right? Because you can see that you're going back to these. Let me Control Z. You're going back to these moments where you see that there's support, right? You see that there's, you know, the support area right here. It touches it twice. So then you say, you know what? I'm going to buy on this support area here, right? And there's a move up. You see this first move, right? And remember, everything moves 1, 2, 3. So people think this. They think there's going to be a breakout, right? See the breakout? See how the breakout happened? There's a breakout. They know that it's going to come back and retest, right? Which is where everybody comes and says, oh, I'm putting my buy order here. You see this? Bing, bing, bing. Now notice how this is the daily, guys. This is the daily, just so you can understand. But these patterns happen all the time. There's a hit on the daily. It came back to the daily. It hit again on the daily. It hit again on the daily. At this point, guys, bing, 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 you think that you have a solid floor. Notice on our indicator that we can see that the money is still heading down through those times. See that? The money is still going away. Money, money gone, money gone, money gone. Blue moon. Blue moon on this candle. You guys, after having 2 daily hits of retesting this position, you guys think that the third time, you ever hear that? Third time wins? You guys ever hear that? Third time's a charm. You guys think that that third time, and it normally is going to give you some type of move, and it normally does. This move, right? You guys might not think it's nothing. It's a 10% move. See that? This move here was 10%. All right, you see here, this move to here was 10%. Now, what happens is these are retail investors. Okay, these are snipers. These are traders that are just, setting up for a very simple trade. Okay. These are scalpers, snipers. They're trading lower time frames and they're going for something very simple, right? They're going for a 5 to 10% move. They're using leverage that's normally 20%. So they're looking for 100 to 200% profits. Once they get those profits, right? Once they get those profits, they sell. Okay? And that's why you see this big sell off here. Now, the reason why it becomes a big sell off, the reason why it becomes a sell off is because the people that were buying this section, there's not a lot of money. You see down here? There's not a lot of money. So there's nothing to hold that level. So once that move happens, because the money, you can see right here, the money is going down, right? You see this blue line, how it's pushing up that last time, and the blue line starts to go down. Let me open that up for you. So this is our indicator right here. You see how the blue line starts to come down? Let me see if I can get rid of some of the candles. Only on, let's see. Okay, so let me, oh, those are the peripherals. Wish I can make these. a little bit. But yeah, so here's the blue line right here. You see that blue line right there start to come down right there? Right? As it starts to come down, that lets us know that we're starting to move in a downward move. So when there's this spike here, that's just a small part of retail trying to buy these limit orders. This is basically bad investors. Okay, this is retail. All right, these are bad investors right here. They're buying against the grain, right? That's why it doesn't hold support. So when you see something like this spike here, you can short that spike because notice here, we're nowhere near, right? You see this section right here? We're nowhere near a green moon. You see that? There's no green moon coming, right? See how these two lines cross and make a blue moon? These are not going to cross to make a green moon. So when they don't cross, man, right? When they don't cross, then there's no bounce. So there's no bounce here happening. There's no bounce here. So we know that this bounce is going to end very badly. And then all of a sudden, there's the sell-off right there. See? Now, once we get that sell-off of the bad retail investors, then we start moving in the direction here, right? You see the moving of the direction here. You can see that we're starting to get the momentum back, right? Because we had money come up, money come along, and then these people sold out of their position, right? Which basically at that point, this creates the floor, okay? Because once you see that type of sell-off, this becomes what we call the floor, right? This area here. So when this starts to head up, right? You see that? Anybody understand what I'm saying here? Hit ones in the chat if you understand what I'm saying. Hit ones in the chat. Is there anyone here interested in learning the trade? Right? If you're interested in learning the trade, you know, if you're in the US or whatever, or abroad. But sometimes I be going on here. Tori. So if there's someone here looking to trade, right? Because sometimes I go on and I get caught up in the videos, right? And then I don't get back to you guys because we get into all the basics. Okay, so that's what you want to do there. Include TikTok information. Keep it simple. And guys, this is all education. Um, this is so you can learn what's happening out there. Most people don't. Most people are teaching you um, the double top, the patterns, but they're not explaining to you. Call you up. I got you, man. Are you on the request? Let's see, Matt, JMO, Tori. Well, let me see where you at, bro. Where are you, man? There you go. Let me get you up here. Mike and little Benny, what's going on? What's happening? What's going on, brother? How you doing, man? All right. It's good to finally talk to you. Yeah. You're in the Discord, man. You gotta hop in the chats. So I'm say it again. I say we gotta hop in the chats more in the Discord. Yeah, definitely. Definitely. So yeah, every time I watch your video, I get another little tidbit. Like you were just showing that volume where if it spikes up like that, you're right. I would see that and go, oh, it's going up, and buy in there, and then become liquidity. Right. And that's where, it's and like I said, so it's making trading easy. That this new Discord is a lot different than the Academy Discord. The Academy Discord, there you could make money. So like when you seen it going up and you buy that, there was depending on your strategy, right? Your leverage, how much leverage you're using, what you're attacking, and your entry and what time frames you're trading on. You can make money on longs. I mean, that's a 10%, 20% long. I mean, we all know we only need 1% to make money. So when you have 20%, that gave you at least 10 opportunities to make money. So it just comes down to the strategy. And that's what we're trying to do here in the Making Trading Easy is we're trying to break the kind of like break the code of where you guys there's a slight disconnect of system versus strategy, right? And I think that's why when I kept looking at it, I see how you guys like trade, and I'm like, okay, so you guys you're making good trade. Like Matt makes a lot of good trades. He just he trades the wrong leverage at the wrong times, right?
Yeah, that's still me.
Yeah, and it's you too. It's like you're seeing something, but you're not like executing a strategy, you know? And that's where you have to have your system set up, and then you have to have your strategy. That's why we say find your trade. Like what do you want to trade? You want to trade the pullback, the short, the bounce, right? So right now what we're doing is we're going to go to the daily so that the daily is the easiest way to find the best trading zone, right? And that's simply that when the volume is across the zero line, then we're in the best area for longs. You know what I mean? Doesn't mean we can't short here and there. It just means that there's actually money, right? So if you're going to do a long, monies are going to be a lot more important in those sections, and that's where you have to understand. That's why showing you guys the waves on the money side, they're not always equivalent to the waves that we look at in the candles, but they're showing you that when there's a big, like a wave three, if there's not a lot of money on that wave three, right? You can see that that's a big move to the upside, but there wasn't a lot of money in it. It just meant that the money was overtaking the selling, right? So at that point, there was a push to the upside. It's not going to hold like a normal positive volume. Like when you see the volume that goes positive, right? When that pulls back, it doesn't have such a big pullback. Most of the time, it only pulls back 10, 15% because there's so much money that they're buying the dip. See what I'm saying? So that's the difference of understanding where you're trading. When you're trading the bounces down here with no money, then you have to be prepared that there's going to be short bounces and bigger pullbacks, right? Because there's no money here. And if there's no money in these areas, it's not magically going to appear. It's because the big buyers, right, meaning the market makers, the hedge funds, and all these people, they have a different ideal of what they want to buy. They're waiting for the floor, right? And the floor is when everybody drops out. So what they're waiting for is they're waiting for retail investors to buy the dips and then see how the dips go, and then buy the next dips and see how that goes. And then once they see that you guys got exhausted and you see this sell off right here, that's when they know you're done. The middle people are done. That's what all this is. This is just the middle zone. And when that sell off happens and everyone becomes liquidity, right? Because they're watching this happen. They're seeing the bounces. So what they're doing is every time it bounces, they sell, right? Money's not always made in buying low, selling high. They make money by selling the bounces, creating liquidity, right? So as this comes down, it bounces. They sell because they're selling off. Basically, it's like taking profits. You know, we say take profits. So when they short the first time, They sell 50% of their position. It bounces. Then they see the bounce and go, oh, okay, there's no money here. They sell them another 25% position, and then it bounces. And they say, oh, still no money, and then they sell all their position. And that creates the sell-off. Now, once the sell-off happens, now they're in a position to go, okay, now what we're going to do is we're going to buy back the 50% that we originally sold in this sell-off position. Then when that pushes up, we're going to find a pullback, which is wave 2. When that pullback happens, then that's where we're going to look for another position to put the other 25% in to create that wave push. And once they have that in there, then they start selling off again, right? So what do? They sell off 50% of their position. Retail investors buy FOMO. They push what's called the double top. Then they sell out of their other 100% of their position because now you hit a double top, which creates the bigger pullback. And now they know that where you guys created this area here of 123, they know that when they come across this area again, that's going to be another area that they can look at in that zone to say, okay, we're going to, we know where they want to pay, right? Now that everyone showed them how much they want to pay for the price, now they know that they can come down here and say, okay, you guys want to pay $123, $126 for Solana? Cool. We'll go ahead and put a rebuy in there. So now you're creating the ability for them to, make bigger waves, right? So now they can go wave 1, wave 2, wave 3 is that bigger pattern, right? You just have to understand where you're at. Because if we look at this now, you can see that we have a bigger pattern here. So now we have wave 1. I'm going to make this a 4. I'll make this yellow, right? So now this becomes the wave 1 for them. Now that they've located a pullback position, this is the pullback position. This is wave 2. Okay, there's wave 2. And then, and let me change that to yellow, my fellow. There we go. All right. And then we get that wave 3 move from this position, which is always going to do the retesting of that former line. Remember, they don't need it to go crazy. They just want it to break the previous all-time high that was established earlier from the double top. See? And there you go. And what did you guys actually create there, right? So, we talk about channels, right? And what you created here was the bigger channel, okay? This is just a channel. Here's the bottom of the channel to the top of the channel. It pulls back, hits the top of the channel, right? See, top of the channel, retesting the top of the channel, doesn't break. Then it heads down. What does it test? The bottom of the channel, right? Then from the bottom of the channel, what does it do? It goes back and it retests the top of the channel. See, these are targets. These are now targets, right? That's what we talk about, getting into your channel and knowing, trading the channel side. Then when it pulls back, right, here it goes again, right? Wave 1, wave 2, and then they go for wave 3. See, what that's the thing about Elliott waves. It kind of throws people off, is there's 5 waves in there. But me, I'm always a 1, 2, 3, right? Because the 1, 2, 3 is what retail investors are going to do a lot more, right? Right here, we can see that there's a pullback, right? After the pullback, you can see that there's a move to the top. There's a move back down, and then the next move is the breakout move right there. See the 1, 2, 3, right? So these are more common because retail investors are the people that are doing the most investing, especially in crypto, right? So you're always seeing these moves that happen just like this, right? So now this is wave 1, wave 2, and then wave 3, you get that bigger move. But there's always the retouch of the previous high, right? You see that? There's your target right there. There's the target right there. Push, pull, target, right? That's how that goes, right? And then the other thing is here's how this moves. So you see the previous breakout here of the resistance, right? This is the previous line here is the resistance. It breaks above the resistance, it comes down, it comes again, it doesn't break, it pulls all the way down, and then on this move, because it starts to move up, people believe that since it broke here, it's building momentum, so they're buying here. These are where the big dogs buy because they know that they're going to hold their position because they have their buy-ins already set up on you, right? So they already know that in this position they're buying, right? They go sideways, they push through the pullback. They know this is a wave 2. They're going to buy in these positions here. And now all they have to do is break above the resistance again, pull back, and then you have this section where people are saying, okay, what is it creating? Lower highs, right? So here's a low, then a higher low, and people start buying this lower, and then it breaks out, and what happens right here? It shows support from the resistance. So it broke through, see, breakthrough resistance, break down. People buy. Breakthrough resistance, break down. Higher low. Then the next time it breaks through. So people need 1, 2, 3. All right, so let me explain this again. Every pattern in your head has to be 1, 2, 3. Okay? One move, one pullback, one entry. Okay? 1, 2, 3. That's the same thing over and over and over, right? So here's a move. Do you see the push up, right? Everyone's watching this happen. Then it pulls back, right? Here's the big push up right here, right? What they're looking for is after they get through the resistance, there's a pullback, okay? Right here. Then they push back up. Now they know that they're going to push back up to the resistance because that's a normal trade. So they can trade this right here. And some people do. And once they trade that, then they sell off, then you get a higher low. You see this right here? Higher low. Once you get that higher low, which is right here, right? You're creating a support. Higher low right here. Higher low, higher low. And then they see it push through resistance. And then this is the key right here. This is the one right there. Once they see that it finds support on the resistance line right here, then that's where they start setting up and say, okay, this is where I can buy because people are buying here. They're setting up the buy orders on the pullback, right? Because you see it break resistance here. When it comes back down, right? When it came back down here, right? It came back down. They bought on that resistance line right there, which created the next push. And then you have that final move right there, which is another higher low above the resistance. And that's where retail says, oh, I'm buying here. And they create this move here, right? Not a bad move if you're paying attention at the end of the day. I mean, once again, a 25% move. Now, if you see these things happening, if you have a strategy, right? If you have a strategy that you can use to make money on these particular retail investor patterns, right? Then you can get in on that. Now, let's take a look for us. Now we know, right? And this is how easy it is for us, right? So we know that if we go back to this area here, let's go back to where we were, where we've seen all the, the craziness happening, right? Down in here. We know that during these time periods here, right? Let's go over here. We know there's no money here. Remember? We were looking at that, no money. Okay. So down here, we know there was no money, but we know it's building. When we seen this move down, right, that becomes a floor move. Notice as the floor breaks up, we get the entry box. You see right there? We get the box that tells us that there is now positive value in the game. This white box means that we can trade long. So once we know we can trade long, what do we look for? Wave 1, pullback, wave 3. Here we go. The breakout, wave 1, the pullback, wave 2. The next entry right here, as they start to see out, we know that this is a better support entry, okay? See this area here? We know that this is a better support entry area here because we have seen this repeat over and over. So we know that this area here is a better support zone to buy right here. We know that this is a better buy zone of support area here because we're working on wave 2. Right, we're working on wave 2. So when you see this pullback and you see this go way down to here, right, and start to go up, you know that your entry points are on these earlier support zones. 144. Right? And you know that your lowest area is going to be the bottom of this candle here. Right? So this is your stop loss. And let me put that on the bottom. Let me put it on the bottom. Let me put it on the bottom. So now you have your stop loss area, right? So now you have an area here that you know you have support to buy in, right? So once you see this hit the bottom and start to move up, you can put your order zones in here, right? And say, okay, I'm getting in here. And then you know that your biggest pullback is down in this area here, right? And then because you are in a buy zone, right, a buy zone area, we know that we're going to have shorter pullbacks because there's actually volume here, right? There's money here. So we know there's not going to be big pullbacks here. So all we have to do is what? If we look at our moon indicator, let's take a look here. See, our moon indicator is moving down, 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 and then right here, you see how it goes down and it goes sideways? You see how it leveled up? And then once it levels up here, it starts to tick up. So we know on this tick up here, right? And at this point, if you're watching wave 2's pullback, you can see the money start to go sideways. You know that the next move here from this area is going to be the long move. Why? It's because the odds of it are very high because you're in a high volume area. So you know that this is the pullback and this is the entry mark. So now if you go up here, right, you can tell that your entry starts on this candle. Okay? Now, that means that this is your entry point, right? Now, if you're doing support and resistance, right, let me show you. Here's the normal strategy. Your support resistance would say that your entry is 144.82, right? And let me measure this out. And your stop loss is 3% down, right? Which means that if you're doing a 10x leverage here, and you expect it to go down 3%, right, 10x, that means your stop loss has to be 35% here, right? If you're entering here at 144, and you're doing a 10x leverage, you have to allow for that pullback right there. Now, how do we avoid this pullback? How do we avoid that pullback, right? We avoid this pullback by using the indicator to let us know where the money is, right? So once the money starts to go sideways on the daily, right? Once it starts to go sideways, you see it here. Once it starts to go sideways, then we know that our entry point is actually in this zone here, right? So let's focus in on this zone. So now that we know that we're going sideways, then we know that we would be looking at an entry in this area here, right? On this candle. So this candle would be our entry point. Now, there is a philosophy of the half a candle entry, right? Which simply means this. So this candle goes from here to here, okay? And your entry, and I'll turn that green, your entry would basically be set, we're halfway through this candle, which would be about here. That would give you a 147.39 entry, right? So that's the way to look at that and say, okay, when I see this candle push up and start to come down, the middle of this entry would be 147, right? And you have your support entry, which is right here, of 144, right? So when you see this candle pulling down, right, you see this downward, when you see the beginning of these wicks, right, see the bodies of these candles, right? As this starts to level out, once the money starts to level out on our indicator, you see the money level out, you can see the candles are starting to level out. So if you're watching this candle level out, then you would be looking in this area to say this is remember, this is your buy zone area, right? And you'd be looking in this area here to say, okay, the middle of this candle is this right here, right? So these are buy areas, depending on your strategy, that you can enter, right? The way we decide when a buy area becomes a good buy area, right, is simply this. When the value starts to show it move itself sideways, right? So this is the candles. You start to see the value go sideways. We know at that point, this is where we want to be. We want to be somewhere in this candle here. We want to enter somewhere in this position, right? The middle of this red candle is 140, 146, right? So there's an entry point that you could put. You can put the entry point here in the middle of this candle here, right? So there's your first entry, the middle of that candle. Here's the middle of this candle. We'll put it here somewhere. There's another entry, and then you have your support entry right here. Now, once you start moving to the upside, you're probably not going to get back to this support area here. So your bet is to shoot for the middle of this candle or the middle of this candle, right? Either way, there's no wick on this candle here. So either way, if you're getting in early, that would be your earliest entry. That would be a 10x leverage, right? This would be a 10x leverage because you have a 35% stop loss because of the pullback option. This entry here, you would be a little bit higher because what you know that is that on this, you've already seen the pullback to this lower level here, right? And then you've seen this level out. So when you pick this entry here, this is the pullback level for you is going to be this. So if I go from the middle of this entry coin here, which is actually a little bit lower, it's going to be right about here. It's almost the same. It's almost the same price. It'd be in this section here. So when you go from that section down to its lowest point here, which is the next possible stop loss, because you're starting to move in an upward direction, because we know we're moving in an upward direction because of the value, we know that this is only a 2.3. So it's still a 10x leverage with a 30x stop loss, right? And that gives you that right there. Now, these two trades are going to end up being, wherever you decide to get in on these trades, are going to be 10x leverage because your pullback is a 3% pullback. So you have to, if you're trading earlier here, you have to respect that there is going to be a pullback. If you see this move here already happen, and now that you realize you're going sideways, this is where you make, when you make on this trade, you can increase your leverage from 10x to 20x, because 20x, you know that there's going to be a shorter pullback opportunity. So now you're looking at, okay, if it pulls back, it's probably only going to pull back half of this candle, which means if I do enter in this position, the only thing I really need to be afraid of is instead of a 3% is a 1.5, which means I can do a 20x, and that's only a 30% pullback. So now we're doubling our profits that we're going to make from a 10x leverage to a 20x leverage, because we know we're in a good position. If you're waiting for this to actually move up and you're patient and you say, I'm going to take the safest trade, right? This is strategy. And you're going to wait for this daily to move up until the white line hits, which is right here. Then that is on this candle here. You see how this moves up? That's this candle here. So that means that on this candle here, right, your entries would play like this. Your first green candle, okay, let's open this up. On your first green candle, this is a entry spot. Here's the bottom of the wick, right? You see this? This is the bottom of the wick. I'll show you right here. That's the bottom of the wick. And then this is the top of the wick. See? In between here, 50% of this, and I'm just going to measure it out for you so you can have measure 50%, right? So this goes up to 3.4, so that would be 17 something. So that would be right about here. That is the middle of the candle right there. That's the middle. So your entry, when you see this candle as it moves through its daily and it comes down, right? And the next candle comes in, your entry point would be, an early entry point would be right here at 147. All right, that would be your entry point. Now, that's if you're super early. If you do not get that super early and you see this candle is moving, right? Because, it moves across. This is the bottom. This is your entry. What this is that the very first green candle that happens on the daily, as it once the big move goes to the upside, you would use the middle of that candle as an entry point for where you want to be. So these are your three entries, right? But now that we're in this candle, right, and we can put a line here, this is our entry candle, okay? This is our entry candle. Once we see this move up, we know that we have an entry candle. We can enter anywhere on this candle, even if you came in late. So let's go to the worst case scenario and you get in this candle right here, right? Green, entry, right? This is the worst possible entry you can get, is a 156, okay? Now, once you're in this trade, we know that we're moving to the next push to the top. The worst case scenario, if you're the worst trader, you get a 18% move to the top, right? So the best part about being later in the game, doesn't mean that you've missed out on all these entries here, right? Because these are like lower level entries. These are like different strategy entries. You've got entries down here at 10% for 144, 145, 20% at 147. The best part about waiting for this to actually go up and knowing that you're moving in the upward direction is that when you do this entry here, okay, and let me go ahead and I'll break this down for you so you can understand. So if you have this move here, this is a 10x leverage, and we'll measure this out and we'll get another. Okay, so let's say here, let's say you entered here and you got a 10x leverage, okay? the possibility of this trade runs up, you get a 27% move, right? You see this? This is a 27% move, right? So that means times 10, right? So you get a 27%. 27%, 10x leverage equals 270%. Okay? Because that's 27% moved multiplied times 10 because you're using futures as a 10x leverage. This equals 270% gains. So I'm going to put this here. I'm going to run this down to a 12. And we're going to put this in this section here. And that would be your first entry. Your second entry, right, is us just going to be, let's just go to this main candle here. If we wait and we go to this next entry, right, which would be here, the next entry would allow you to go to a 20x. So I'm just going to clone this. And this would be a 20x. And this percent would actually go up because you wouldn't be here, you'd be setting up here. And this moves down to a, not too bad, we'll say 26%. We'll give it a high end. So that would be 260 times 2. So what's 260 times 2? 520%. Okay. Then this one right here, let me clone you up. This one would be running a little bit higher because we have a lot more better entries. We would be running this at a, let's measure this out. So this entry would get us in here at 156. This would bring us to an 18% move. So we would have 18%. We would use a 40x leverage. And that would give us, let's see here. A little calculator math here. All right, so we have 180 times 4. So that gives us 720%. So by being patient, right, and waiting for everything to actually clear up and be what you need it to be, you end up in a situation where you don't have to worry about big wicks or candles wicking you out, right? You don't have to worry about that. And you're able to take advantage of the most profitable trade. And down here, you're taking the most risk, right? You end up with 270% for your risk. And then here, you're taking a not as much of a risk, but still a decent amount of a risk. And you could up your leverage to try to get rid of the risk, and you go to 20x leverage. And what happens there puts you in a spot of 520%. And then if you go here and you take the ultimate safe trade where everything's already full of volume. Now remember, you could have got in this trade anywhere in between here. So there's a whole area from here to here that you could have got in this trade. Okay, I'm just taking the worst trade possible, and that being at a 18% at a 40x leverage, which is what we like to trade, the reason why we trade 40x leverage. And you would make 720% by taking the safest trade. So let me ask you guys, what do you think would be better for you to do? Right? So we're going to go live again in about an hour. I'm going to wrap up this video, and that's just an example of, how we use our system. If you're interested in the system, right? And you're interested in learning to trade, then if you're in the USA, we posted that for you. You can send this right now. Take a screenshot, right? Take advantage of it. Send me a text. Max, what up? But as you can see, this is us using the system that we have, waiting for the best possible moments for trades to happen, meaning that this section here, and we'll come back and we're going to reevaluate the next section, that once the volume goes positive, right, and there's a pullback, once we see that move to the upside on wave 3, we have targets, we have confirmation, we have all types of things that allow us to think that this wave will be a pretty good wave. So we're going to come back and we're going to go look at the rest of this chart after this, and we'll get back to you guys. I need to slow down and not have to be in such a tough spot. Well, it all comes down, like I said, guys, systems and strategies, right? So once you have a system, right? So once you're in the Discord, you have a system. Now that you have a system, you gotta build the strategies that work for that system, and that is the key to basically putting it all together, right? So we're gonna stop this video real quick. I'm gonna take a quick second here. We'll come back and we'll reevaluate all this and get this going again, and we'll reset this up to where we're understanding what part that we're in, right? So make sure you understand that systems are what you have to have. Strategies is what you need to get into, right? So we'll come back in here and we'll figure out what we got going on. We reached 19,000 likes, which is good. And we'll take a look at some more trades there, guys. So that right there, we're going to wrap up this video here. The beginning of the daily long trades, and we'll make part 2 of this video, and we'll continue on this so we can get that basics down, guys. All right, good luck, God bless. We'll see you soon.